Hi everyone, welcome to the second video in the CMAT Innovation and Entrepreneurship series. Let's have a look at the questions. Question number 1. The first statement says, startup valuations are generally lower during the seed stage. Now the terms themselves can help you understand what the concepts are. A seed is planted at the beginning. So generally lower is the amount of risk and the amount of money. You can very well guess that. So this must be true. Stage than in later funding rounds. Yes. The second statement says venture capital is usually the first source. If you remember this concept of bootstrapping from the previous video, I had just touched upon it. Hope you read about it already. Bootstrapping was the first stage of funding, not venture capital. Venture capital is something that gets involved in a business once the potential has been proven, which happens through the initial investment by the investor or the starter, the entrepreneur himself or herself. So the first source is not a term that is associated with venture capital. So statement number 2 is not going to be worthy of being said as true. 1 is the one that qualifies. We pick statement 1 is true and 2 is false. Question 2. Pivoting refers to a strategic change made in response to learning from the market. Learning from the market will tell you how you need to modify or upgrade the way you conduct your business. Every pivot. Now here's something that I want you to pay attention to closely. The term every is an extreme term, and usually in any aptitude test, especially with questions that are slightly available with slightly confusing options, you would try and avoid such words. Every, none, all, forever. These things are best avoided. So every pivot necessarily requires a complete shift in the target customer segment. A complete shift would mean that the product or the thought process has to change from the very base, which is not really true. So even in this case, statement number 1 seems to be doing well by saying that you learn from the market, you pivot, you change directions. But a complete shift is not what we pick. Only one seems to be true. The second one is false. Question 3. Venture capital plays an important role in strengthening innovation-driven entrepreneurship. What I said for question number 1 holds true here. Venture capital typically provides high-risk funding through equity or convertible instruments to young, high-growth firms. This seems to be doing a good job. Is the explanation correct? Let's have a look. Important role in strengthening innovation, driving entrepreneurship in emerging economies. Fair point. Venture capital typically provides high-risk funding through equity or convertible instruments to young, high-growth firms. Emerging economies, venture capital, we would need that to happen, right? So this is going to work. So both A and R are true, and R seems to be a good explanation for A. Question 4. Incremental innovation, gradual innovation, focuses on continuous improvement. That qualifies as a good definition of existing offerings and processes. And the second one says radical innovation. Radical is from the very base. This will shake the foundation, the way a product is looked at, or even probably it is going to position the product in a different manner. Generally involves greater uncertainty and risk than incremental innovation. Incremental innovation is very gradual, that's right. But radical innovation, innovation at the very base, at the very fundamental level, is going to shake the business a bit. So both these statements are fair. The next question. Modern tools and digital platforms have significantly enhanced idea generation. That's true. We all know what AI does. for innovation and entrepreneurship. It has become a lot easier. The reason given is high quality ideas form the foundation of innovation. That's true. And multiple techniques are available to systematically generate them. Why do we need them? It is very simple. You want the business to survive. The basic formula for the survival of an entrepreneur in business, right? So we pick R as the correct explanation for A. A and R are true and R explains A. Question number 6. Now here is a slightly different question because we haven't really had this situation before. Business scaling, this is a term that is used when you want to increase the scale of the business. Refers to expanding operations. That's perfect. To serve a large customer base efficiently. Well done. A niche market represents a narrowly defined segment. Yes, a niche market is a market that you want to target. It is a very specific area that you want to look into. With specialized needs, yes, that's correct. But there's a problem. And the problem is this R does not really explain the A well. So both may be true, but R doesn't really explain A very well. So we pick A and R are true. R explains A? No. R does not explain A. The next question. We have to identify the correct statements. And before you jump with joy because the first statement is correct, have a look at the choices. Only C and D, only A and C, which basically means that multiple correct answers are possible. Multiple correct statements are possible. A manufacturing facility automatically qualifies as a business incubator. An interesting term, something that you would like to read up on later. A business incubator is a business itself. It helps other businesses flourish. It provides the mentorship that is required. But a manufacturing facility is not one. It has to be a firm, it has to be a human being, something or somebody that can support an upcoming business, which is definitely not going to be a manufacturing facility. Fixed monthly income is a guaranteed feature of entrepreneurship. Really? The fact that you are ready to become an entrepreneur is a sign that you're ready to work on a fluctuating income basis. It may rise, it may fall, or it may rise and fall, at least initially. So this is also not going to work. At this stage, there are two things to do. One, you can choose to look at the remaining statements, the remaining choices, and then look at the combination possible. Or right at this stage, you can look at the given choices on the basis of whatever you've already eliminated. Let's have a look. A and B are supposed to go out. So if A and B are not available to us, then option B, which contains A, option C, which contains B, are already out. Let's look at the third one because we still have two choices left. An incubator provides shared infrastructure and mentoring to startups. Yes. The precise reason why one was wrong is the reason why C is correct. Age is not a barrier to becoming an entrepreneur. Fair. Prior corporate experience is mandatory. You can be an entrepreneur in the most basic at the most basic of levels, and that doesn't need you to be educationally or corporate wise qualified. So prior experience is not going to be something that is mandatory. So this is also not going to be required. We have C and D, the combination that is going to work. Right? Let's go to the next question. What is the primary objective of a pitch desk? A pitch deck, my apologies. Pitch is what you propose, is how you want the business to proceed. It is what you want to tell the investor so that they might feel interested in your business. Outline daily operational procedures. Remember, we don't have choices here. So only one of these is going to make the cut. Daily operational procedures is not going to be a part of the way you propose your business to somebody, right? Demonstrate product design. Fair, but at the beginning. to investors? Not really. Communicate the business opportunity to potential investors. Here is my key term, potential investors. I want them to be interested. I want them to invest money so that my business can take a head start. And I think this is enough. It is going to be better than option A and B. Obviously, D is talking about internal team performance, which is something that happens later. Question number 9. Innovation includes the development or adoption of new ideas. Yes, that's the definition of technology. Processes or administrative practices that can help organizations maintain long-term competitiveness. Yes, it is the competitiveness that is important. It will keep the business growing, and it is innovation that will help you remain competitive. So this is fair. The process of adopting innovation completely bypasses. I was talking about extreme terms. Here is one. Completely bypasses the initial phase of need recognition. Need recognition is a very important factor. It will never be escaped or skipped at any stage. So this makes this stand as invalid. One is the only one that is fair. So we pick one is correct, but two is not. Let's go to the next question. We saw this term in the previous video. Who is a venture capitalist? This is a company or a person on the behalf of a company who wants to invest in your business. But of course, it's not going to be straightforward. Can be best summarized as what? As was the case, some questions, for some questions, we see that there are 4 choices, but each of those has a combination of the given statements. So let's have a look at all of them. Founder's idea combined with investor's capital. Yes, that is what a venture capitalist does. Investor's capital is going to be a part of what is required to enhance the founder's idea. So this is okay. Investor's idea funded by the entrepreneur. An entrepreneur cannot fund. The entrepreneur needs funds. Entrepreneur's idea financed by public funds. It's too early to talk about public funds. You have to attract potential investors first. At this stage, I was talking about something earlier. Look at the choices. You might just have your answer already. We do not want B and C to be a part of the answer. So B, C, and B. This makes B, C, and D, choices 2, 3, and 4, stand eliminated. A is the only one left, so there is no real need to look at D. But since we are trying to understand the concepts, let's have a look. Investor's idea? Investor's idea? Really? This is where this fails. This is also going to be discarded. We go with A only. The next question. Which term describes the earliest stage? There are always going to be keywords that might help you answer questions, even in case you do not understand the concept very well. Of a startup, when ideas begin to take shape into potential offerings. Since we do not have a combination to work with, only one of these is going to make the cut. Scaling is used for increasing in the size, the proportion of the business. Ideation sounds like a good word. Market expansion is not going to happen at the initial stage. And of course, growth happens only after the business has been launched. So we pick the second option. Identify the set that represents recognized entrepreneurial strategies. If you have known a couple of entrepreneurs and you can just think of the way they've progressed in their businesses, you might be able to answer this without really knowing what the strategies might have been. The options are a combination of A, B, C, D, and E. So it might just help keeping an eye here while you are evaluating these statements. Achieving first mover advantage with rapid execution. Yes, this is going to work. This is going to work because I am trying to start things before anybody else does. Incremental improvement. If you remember a question that we saw a while ago, incremental improvement is gradual improvement. That is what at the beginning stages is important. So this is also where investing solely for guaranteed returns. Here is the problem. I talked about extreme choices. This is one of those. Guaranteed returns are not possible when it comes to entrepreneurial strategies. The fact that you want to start a new business means that you're ready to take risks. This is not going to work. We found the first culprit. Let's look at the choices. C is available here and in the third choice and in the fourth one as well. That should tell you that the answer has to be the first option. It says A, B, D, E, which means all the other statements are valid. Let's check. Targeting and dominating a clearly defined niche. Yes, because you don't want to start on a large scale. You will have to define where the business is going to head. Continuously testing and refining the business model. Yes, because you want to avoid risks. You want to ensure that the business turns profitable. So this is a yes. This is a yes. The correct combination is option A. The 13th question. Which of the following are valid components of feasibility analysis? If you remember, a similar question has been asked in the previous video as well. Feasibility is viability, trying to check if something is going to work for a business or not. Market and industry assessment, yes, you want to check. Leadership personality profiling. Now, this is not about the business. It is going to be about the people running the business. We were talking about feasibility of the business. So here, the owners of the business or the investors don't really play a role. What we did a while ago, we can try again. B is to be eliminated. So at least two choices are out. We are supposed to choose between the first and the fourth options. Financial feasibility, yes. Whether you have the money or not, whether you have investors or not. Organizational capability analysis, probably. Product or service feasibility. The moment you say feasibility, it has to work. The moment you've ticked E, automatically this has to be the correct answer. Let's go to the next question. Statement 1 says, business incubators. Remember, those businesses that allow you space in their own space so that your venture can take a good start, generally acquire ownership stakes in the startups they support. No, they don't. That will make them a venture capitalist. These are business incubators. Incubators, the term, if you know what that means, is going to be a place where new entities are supported. So this is a no. Incubators provide infrastructure, mentoring, and shared resources. Yes, that's the definition that I like. That's the definition that fits this term, business incubators. We go with only the second one. One is false, two is true. And the last question for this video. Startup accelerators are designed to fast track the growth. Accelerators, fast track, yes, it fits the definition very well. Of young ventures through structured support. This is a beautiful term. Structured support, not random stuff, which makes this fair. Many startups face significant challenges. Do they? Yes, because they do not have experience. When transitioning from early validation to rapid growth, yes. Is that the reason why accelerators are designed? The answer is a yes, because these new businesses don't really have experience to run them successfully. So R is a good explanation for A. We choose A and R are true, and R explains A, the first choice. That is it for this video. We'll see you in the next one.